So as you guys know, Apple stock has of course long been Warren Buffett's largest holding in his portfolio. Of course, that's through Berkshire Hathaway, and he's always praised Apple for having an incredible cash generating business. And that's really despite the fact that he's admitted to not being very tech savvy himself, but he just couldn't ignore how sticky their products and services are, how many customers around the world love to use them, and many of which, by the way, are even willing to upgrade those devices every year despite the very expensive premium price tags for Apple products, all of which has generated enormous cash flow for the company, which is something that Buffett has always prioritized in his investments. Now, while that is the case for most of his stocks, well, the 93-year-old CEO has also surprisingly been a big supporter and investor of the fast-growing cloud computing specialist Snowflake. And I say this, surprisingly because well, it's not only a tech stock, but it's also a stock here, a company that is not even profitable, instead focusing on high top line growth, which is kind of the opposite of what Buffett usually looks for in his investments. Anyway, all of this to say that Buffett was a very big believer in those two companies, and yet this month, the market was shocked to learn that Buffett actually decided to sell almost half of his entire Apple position last quarter, while also completely exiting out of his entire Snowflake holding as well. And by the way, the craziness doesn't even stop there either, as in fact, another ultra popular investor, some might argue the second most popular after Warren Buffett, Ray Dalio, through Bridgewater Associates, which he founded and still leads their investment committee, well, they too decided to sell Apple stock, cutting their position down by almost 75%. It's absolutely wild, guys. And so this really begs the question here, what the heck is going on? Why are two of the biggest investors and hedge funds in history all of a sudden turning sour on Apple stock and selling such a giant amount of it, as well as Snowflake stock too? Well, look, we got this information through their mandatory 13F reports that they have to file with the SEC every quarter, but unfortunately, they're not required to give reasons as to why they make these purchases or sales. Now, sometimes they will give some clarity on this through an earnings report or maybe during a shareholder meeting, but unfortunately, at the time of this recording, we have not received any such official statements from either Berkshire or Bridgewater. However, I do feel that we have enough information here already to make some pretty good assumptions as to why they made these moves. So let's jump straight into this, and I'll share with you all of my thoughts and opinions as we run through this, and I'll even tell you if I agree or disagree with the moves that they made and what I'm doing myself personally too. Okay, so looking at it here, we have Berkshire Hathaway's 5 biggest sales last quarter, which includes both Apple and Snowflake. Now, we'll start with Apple first, and then I'll talk about Snowflake right after. But when looking at Apple, their largest holding that was consistently making up around half of their entire portfolio up until last quarter, well, they now decided to cut it by almost half the entire amount. And by the way, if you look at that ownership history there, it's in the blue bar graph there. Well, you can see that they sold a small amount of it in the prior quarter as well, which at that time was about an 11% decrease. Now, back then, that was in Q1, Buffett was asked about that sale, and he basically said that it was pretty much entirely to do with taxes. He felt that in the future, the capital gains tax will rise, and because he's already up by so much on the Apple position, he just felt that it was a smarter move to sell the stock now at a lower tax rate, and then potentially he could always buy back in later if he chooses to. Well, of course, we know now that the following quarter, he did not choose to buy back those shares, but instead actually sold even more, cutting it by an additional 49%. So one obvious question is, is this really just a continuation of that same feeling that he had, that the tax rate will rise in the future? So it's smarter to keep selling for now to lock in those really high profits at the lower tax rate. Well, if we go back to that chart there, based on the average buy price during the periods where he purchased Apple stock, well, it's estimated that he is up close to 500% on his Apple position. Now, I heavily emphasize the word estimated because these figures are usually wrong. He's probably up a lot more than that just because of how average prices work. But yeah, either way, we're essentially talking about gigantic profits here, so large in fact, to where it probably does make sense to lock in those really high profits if you really do believe that the tax rate will go up for them if you were to sell them at a later date. Plus, you got to keep in mind too that Buffett has always really loved Apple's business, so it would be a little strange to suddenly turn sour on it and sell the stock just because he doesn't believe in the company anymore. In fact, Buffett was quoted once in saying that Apple is probably the best business that he knows in the entire world. So that's a big statement there coming from someone that is so heavily invested in so many different companies, to where I really doubt that all of a sudden he just thinks Apple has a bad business going on. And even after this most recent sale, again, Apple still remains the largest holding of his portfolio at over 30%. So that does lead to some credence here that perhaps he did continue the selling because of tax rates rather than it being about something to do with the business. However, I personally don't think that that's the reason, or at least not the main reason. It could be part of the reason, but even then, I think it's a relatively small one at that, because when I look at Apple stock and I look at the economy and I look at what Warren Buffett always preaches as an investor, it just makes so much more sense that he would think that the valuation is too high at these levels, and it's therefore time to lock in profits even if he really likes the business, just in case the stock happens to fall in the near future. And here's why I suspect this. So, number one, you look at the economy, right? Well, everyone is worrying about a recession happening soon, right? That's not to say that it will happen. And in fact, the Fed is very likely to start lowering interest rates very soon, which if they did it soon enough to avoid a recession, it would probably send the market climbing rather than falling. But as it stands, interest rates and inflation and debt levels across the board, across the entire economy, are still at insane levels right now, which is weighing heavily on everyone. By the way, I don't want any ridiculous comments saying that inflation has come down. Inflation is cumulative and has absolutely not come down. We are still under huge inflation, and all of this is weighing heavily on consumers, which, by the way, spoiler alert, Apple's entire business really relies on healthy consumers to be able to purchase their premium, expensive products every year. So that in itself is already a bad sign, which, by the way, you can already see some of this taking shape in Apple's growth rates. Now, don't get me wrong, this is still easily one of the absolute best financially performing companies in the entire world, usually doing around $350 to $400 billion in revenue, with close to $100 billion of that going straight to the bottom line, which is insane profitability. But the growth is slowing down. In fact, both figures actually declined last year, with sales only expected to rise by a measly 3% this year as well. That's very low coming off of an already declining year. Now, from there, it is expected to get a little bit better, but not anything that would break out into the double digits. Of course, that's probably fine when you're already so profitable like this. You really care much more about the bottom line as opposed to how fast you're growing those sales when everything is already so large, which, by the way, talking about profitability, well, EPS, that's still expected to grow by a double-digit rate on average over the next 5 years, which is really good. But you also have to keep in mind that much of that growth is being fueled by huge stock buybacks. And even then, it's also about half the growth rate that they saw during the previous 5 years as well. Again, though, I'll just reiterate that Apple is one of the strongest companies in the world, and even I own a little bit of the stock myself too. So I don't want to sound overly negative, but all I'm saying is that at this massive size, growth is going to start to feel limited, especially if the economy happens to get worse. Which leads me to reason number 2. Buffett may feel that the valuation is just too high right now to take that risk. In fact, Apple is currently the most highly valued company in the entire world at over $3.4 trillion of a market cap, which is after climbing by close to 800% in the past 10 years up to a record high. At these levels, even by what is probably the most forgiving valuation metric that we could look at for Apple, the adjusted PEG ratio that factors in future EPS growth, which is obviously Apple's strongest metric at the moment, well, it still sits at almost 4. Guys, generally a PEG ratio of 1 is considered a good value, but Apple's is almost 4 times larger than that. And even when compared to their own 5-year average, should be more forgiving, right? Well, it's still 62% higher than that. And even compared to the sector median, it's still over 100% higher than that too. And so I think that rich valuation coupled with the slowing growth, coupled with the weak economy, coupled with how much Buffett is already up on the position, and also coupled with the fact that he thinks capital gains tax will likely rise in the future, well, it all just kind of makes sense for why he would choose to sell now. After all, probably the most famous line from Buffett ever is to be fearful when others are greedy and be greedy when others are fearful, which, of course, in this particular case, I think the former to that saying applies, to be fearful when others are greedy. Because when I look at Apple stock and its valuation and how high investors are driving up that price, well, it definitely looks like, there's more greed going on rather than fear. And I wouldn't be surprised if Ray Dalio's Bridgewater felt the same way about this too, choosing to sell almost 75% of their position as well, which, by the way, they had actually just purchased those shares the quarter prior, but were already estimated to be up around 24% on it. So they probably saw a big profit happen so quickly that they decided to lock in those profits too, because of that rich valuation and because of where everything stands right now in the broader sense too. As for me though, I'm still holding my small position long term because I love how much cash that Apple generates, how much cash they currently hold, and all the future potential they have in terms of moves that they can still make with artificial intelligence and folding phones and other things that could convince a lot of their user base to upgrade their devices. I actually have a few family members and friends who are still rocking iPhone 11s and 12s that I know would probably be willing to upgrade if the new ones came out with some really cool AI features or could unfold into like an iPad mini. That would be really cool. Or even folded down in size, right? Like the clamshells could fold down in size. That would, I think, especially be popular for girls out there who like smaller phones and stuff like that. So there's just a lot of ways that I think they could still convince people to upgrade a lot in the future too. So there are some things to look forward to. I just think, the valuation is high. And so personally, I'm not buying any more shares at this time because I think my returns could be much greater with other stocks instead. So I'm not buying anymore, but I'm still holding on to what I have. But I can definitely understand why Buffett and Dalio sold their stocks. It's never bad to lock in profits, especially when you're dealing with what is essentially the most expensive stock in the entire world, at least by market cap. Now, when it comes to Snowflake, well, this one is actually quite a bit different. In fact, it's kind of the opposite situation of Apple, and I'll explain why. Let's pull up that chart here again. Now, you can see right there, a 100% decrease in shares seemingly out of nowhere. And where this really differs from Apple though, and even all of these other sales too, is that Snowflake was the only stock of the list that Buffett was actually down on, and not just by a small amount either, but according to the estimates, he was down close to 40% on his position. That's a pretty big deal, guys, because it means that Buffett sold at a loss. So in this case, you can't even really make that argument anymore that he did it to lower his tax burden for the future, because he actually sold it for a loss, which makes the move even more puzzling, as selling for a loss is not something that Buffett tends to, usually do. In fact, if we go back to that saying, be fearful when others are greedy, but be greedy when others are fearful, well, looking at Snowflake's price performance, it's pretty clear that investors have definitely been fearful on the stock. In fact, this year, most AI and cloud computing tech stocks have skyrocketed in price, but Snowflake has actually crashed by 38% year to date. And even more so if we go back to when they first IPO'd, it was like in 2020. Since then, the stock has lost over half its entire value. So why then would a long-term minded investor like Warren Buffett sell out of the stock instead of, actually buying more if he's currently down on his position? Well, I actually think that this one is pretty simple to explain too. My guess is that he probably felt that the valuation was too expensive for a company that has not made enough progress towards profitability, which matters a huge amount to someone like Buffett. And he was also probably tired of seeing the stock fall this entire time, especially going into a weak economy that could be headed for recession. And it's even kind of snowballed into a bigger deal because of that lack of profitability. Weak economy, no profits, company's going to struggle, right? So I think maybe those things kind of scared Buffett a bit for his investment there. In fact, you look at their financials, while sales were soaring, their net income has actually been gradually getting worse every year. And even their sales growth has kind of decelerated a bit too. Now, sales are still growing by over 20% a year, but you look at the valuation, even after the crash, their PEG ratio is still close to 400% higher than the sector, while even their much more forgiving price to sales ratio is also 300 to 400% higher as well. And so even at a 20% revenue growth rate, as good as that is for most companies out there, it's just not going to cut it in this scenario when you're not profitable, your growth is decelerating, and the stock has been performing so poorly, and there's so many things that could be wrong with the economy. And so I just think that Buffett was kind of tired of waiting around for Snowflake to turn a corner. Now, personally, I've always felt that Snowflake does have a lot of future potential, and I wouldn't even be opposed to buying some of the stock myself as a small speculative play here, after the stock has crashed by so much. But there's only one reason why I haven't purchased any shares myself, and that's because I just have so much exposure to cloud computing and AI as it is. I mean, I own Microsoft, I own Amazon, Google, Alibaba, Nvidia, Baidu, Tencent, Cisco, Broadcom, and so many others that just have, again, even exposure to AI and cloud and so many other things. I have so much exposure in those areas to the point where I just really don't need this type of stock in my portfolio. It would probably feel like overkill if I did decide to pick some up. But hey, that's just my situation. And all of this is just my opinion and my own speculation. It's all we can really do at this point is just kind of make some guesses and stuff. But hey, I'd love to hear your thoughts. What do you all think? Do you agree with my thoughts here? Do you disagree? How do you feel about these stocks? How do you feel about these moves? I'd love to hear your thoughts down below in the comment section. Thanks again for stopping by, my friends. I hope you enjoyed the video, and I will catch you in the next one. All right, take care, everybody. Wish you the best of luck with any decisions you make out there. Take care, everybody. Bye-bye.